Welcome. In this video, when ZBCN coin big rise comes, we will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. A careful examination of the chart reveals a distinct ascending channel pattern in which the price is moving. This structure reflects a very healthy market behavior in terms of technical analysis. Ascending channel patterns show that the price is moving upwards in a certain balance between both buyers and sellers. Within this channel, the price occasionally touches the lower band for support, and then moves upwards to the middle band, and then usually to the upper band. This cycle continues throughout the validity of the channel and offers significant opportunities for traders. Currently, the price is approaching the mid-band with an upward trend within this ascending channel. The mid-band is usually considered as an equilibrium level, and when the price reaches this zone, it reaches the decision stage. The reaction of the price here is crucial for the direction of the next move. If the price reacts upwards from the mid-band, which is quite possible, then the target will naturally be the upper band of the channel. In such scenarios, the fact that the price moves in a manner consistent with previous structures increases technical credibility. For traders, this mid-band region is of great importance because this is a decisive level for both short-term trading decisions and for measuring the strength of the trend. Staying above the mid-band indicates that market participants still have a strong appetite for buying. Especially in such channel structures, a bounce of the price upwards from the mid-band is often interpreted as a positive sign. Such a reaction could start a new bullish wave up to the upper boundary of the channel. In addition, this bullish channel pattern indicates that the overall market psychology is positive and buyers are dominating the market. Prices usually move in such ascending channels on steady uptrends, offering traders both short-term and medium-term opportunities. The fact that the price is currently moving by maintaining this channel structure is a very important factor confirming the strength and continuity of the trend. At the moment, the price moving towards the mid-band is a healthy correction in technical terms. Because no price movement moves in a continuous straight line, periodic pullbacks and corrections are inherent to strong trends. During this pullback, the price touches the middle of the channel, providing a technical balance and creating new buying opportunities. If there is a strong buying reaction from this point, this indicates that the market is still supporting the upward movement and may lead to an acceleration of upward attacks. Another factor to be considered in this process is volume. If an increase in volume is observed in the mid-band area, this indicates that buyers have come into play. Candles with strong volume, especially at this level, create a strong signal that the upward movement will continue. At the same time, buying from this area indicates that market participants accept this level as support and have confidence in it. This confirms that investor confidence is high and the upside potential continues. It should also be noted that as long as the price remains within this channel structure, the overall trend is upward. Unless the lower boundary of the channel is broken, every correction should be seen as an opportunity. In the current situation, the price approaching the middle band may be one of these opportunities. If the price manages to hold here and bounces up, there is a high probability that previous highs will be retested and even surpassed. This increases investors' expectations that the price could reach higher levels in the medium-long term. But we can't decide the analysis only by the channel. Let's look at other metrics. Stay tuned. A careful examination of the chart reveals that the current price movement is approaching a highly critical level. Notably, the presence of a distinct support zone just below the current price highlights the significant role this level plays from a technical analysis perspective. Support levels are areas where buyers are strong and where the price has previously reacted when under downward pressure. These zones are where investor psychology tends to concentrate and often serve as areas where the price changes direction. Looking at the current price movement, it is evident that after an upward move, the price has undergone a slight correction and is approaching the support zone below. This situation can be interpreted as a technically positive development, as healthy uptrends typically include occasional corrections. These pullbacks create buying opportunities and allow the price to consolidate before continuing its upward trajectory more robustly. Additionally, if this support zone has been tested before and the price has responded with strong buying pressure, this reinforces the validity and strength of the support. In technical analysis, such areas are referred to as confirmed support zones, levels that have proven effective in the past where buyers have actively stepped in. There is a high probability that the price will react similarly when approaching this zone again. Support zones are significant not only from a technical standpoint but also psychologically. These areas are often viewed as buying opportunities. Large investors and institutional players typically begin positioning themselves at these levels. Therefore, a bounce from a support zone is not just a technical necessity, but also a natural outcome of market behavior. If the price reacts positively at this point, it indicates the market recognizes it as a strong support, aiding the continuation of the trend. Especially in scenarios where the price has been trending for an extended period and then approaches such a support zone, the preservation of these levels plays a crucial role in maintaining trend continuity. A similar pattern is present in the current situation. The price is in a clear uptrend, and the corrective movement is progressing toward an important support level. Maintaining this support can facilitate renewed momentum and a potential move toward the next resistance levels. In summary, the proximity of the current price to a key support level should be considered a positive technical development. Any buying reaction from this level could pave the way for short-term rallies and provide valuable signals for long-term investors. The likelihood of a bullish reaction increases significantly if the price reaches this level, accompanied by rising volume and the formation of positive candlestick patterns, reinforcing investor confidence and acting as a catalyst for further upward movement. Moreover, preserving such support zones is vital for maintaining the market's overall momentum. As long as a strong support is not breached, the assumption of a positive trend in the market remains valid. In this context, it is wise for investors to closely monitor these levels and position themselves according to the price's reactions. In conclusion, the strong support level just below the current price represents one of the key opportunities provided by technical analysis. The likelihood of the price encountering renewed buying interest and reacting upward at this level appears quite high, both from a charting perspective and in terms of market psychology. Looking closely at the chart, it is noteworthy that the vortex indicator has reached a critical stage. The movements of the blue line in this indicator in particular provide us with extremely important information about the trend direction. When the blue line starts an upward movement, this is usually a sign that the market is gaining positive momentum. And now, we are at a point where this line is signaling to head upwards again. This is similar to the big bullish moves of the past, and from this point of view, a new rally is technically possible. The vortex indicator is one of the powerful indicators used to determine the direction of the price. Basically, it was developed to detect directional movements within the market and is used to determine whether the price is under upward or downward pressure. In this context, a sharp upward reversal of the blue line could be a sign that buyers are re-entering the market strongly. In particular, if this line starts to make an upward divergence, crossing above the red line, this largely signals the beginning of a trend change. Vortex shows us which trend we are in. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.